to move on to part two of our interview now. So in part two, Richard, I'd like to discuss with you Hex in more detail and talk about some of the major events that have happened in the crypto space this year. We're currently in what some people will call a crypto winter. Let's talk about Luna Terra first. So Terra destabilized. It's an algo stable coin. It got destabilized early in the year. Luna, the coin backing Terra, completely plummeted to zero. Now Do Kwon launched Terra 2.0. But Terra Classic, that plummeted to basically zero. And overnight, might I add, overnight. So one of the issues is that there's no supply cap. Basically, it had to be inflated to infinity to prop up the stable coin that it's supposed to be backing. Of course, it failed to do that. That's why both collapsed. Let's talk about what happened there.
Sure. So reflexivity is this property where when a thing goes one way, it wants to go that way even more. It's like a cascade. And so in crypto, when the price goes up, people want to buy more. And then the price goes up, so they want to buy more. And then the price goes up, so they want to buy more. And then it gets punched in the nose hard enough. So for instance, this time, Vitalik and the Ethereum Foundation sold the top, dumped on your head at 5K and murdered the price at 5K, like they did last cycle as well. And, price went down. And when the price goes down, people want to sell. And so the price goes down, the people want to sell. And then you get the forced sellers who have to sell because they took loans and now their collateral isn't worth anything anymore. So they have to get liquidated. And then they're like, oh, liquidation exists. I never thought that this stuff could go down. And so 3 Hours Capital gets liquidated and Celsius is bankrupt. And these other lenders have gone bankrupt because their worldview just didn't understand that, yes, this stuff goes down. My worldview, I've been here so long, I've seen it drop 85% over and over and over again. I know this stuff goes down. It's okay. It's in the game. It's an opportunity. So with Luna, it had this extra parameter which enhanced reflexivity, which was the higher the price went, the lower the supply would be. But the lower the price went, the higher the supply would be. And so it amplified your upside and amplified your downside. Now, this particular parameter got some otherwise seasoned crypto people to buy dips that they didn't understand. So Luna dropped 95% 3 or 4 times in a couple weeks. And people aren't used to that kind of volatility, even in crypto. So people would buy the dip after a 95% drop. And because it had that extra parameter of minting nearly infinite more extra supply as it went down, it would go another 95%. And it would bounce a little bit. And then it would go another 95%. And everyone that bought all those dips lost all their money. And here's the funny part. I warn people, do not short. Do not short. You will lose all your money on a scam wick. There was a company that lost $20 million. I guess they don't like listening to me. Shorting Luna. Can you imagine losing $20 million shorting Luna that went down 95% 4 times in 2 weeks? Can you imagine that? But they don't listen.
How do they lose money? How do you lose money shorting something that went down?
Because it bounces for a second and liquidates you and then goes right back down.
Okay.
So the volatility liquidates you. So even if you got the direction right, you'll get liquidated and then it'll keep going down without you because these scam wicks come up and liquidate you. They hunt you and you get liquidated and buy the local top. And then it goes right back down the way that you knew it was going to go.
Yes.
It's so easy to get liquidated shorting. You've never seen anything so easy in your life.
Okay. Can you explain whether or not Hex could ever experience, in theory, something similar to Luna? Could the supply of Hex be printed to infinity?
No. It doesn't have that property where the supply is tied to price. The supply is the supply. It can only inflate at a maximum of 3.69% a year, no matter what. And that number is actually a lot higher than reality because since the average stake length is 5, 6, 7 years, you only get that inflation at the end of your stake. And so because the inflation is delayed that much, it's delayed forever. It's like a snowball. If that snowball starts out a lot smaller, it takes a lot longer to ramp it up. And since that 3.69 is on such a slow ramp up because these stake lengths are so long, our actual inflation rate is much lower than that. Bitcoin went to 20K from a penny to 20,000. And when it was at 20K, its inflation was 3.89. So our inflation is lower now than Bitcoin's ever was on its way to 20K. And Bitcoin's used to be exponentially higher.
Is there a burn rate like with Ethereum?
Well, Ethereum is still net positive emission. So, the burn just cancels out some of the emission. There's still net positive emission in Ethereum. There is no, well, I mean, it depends on what you consider a burn rate. People will accidentally send hex directly to the contract address, which locks it forever. That's a part of, in theory, a burn. People will do emergency end stakes. Like a hacker will hack an individual. Like some idiot will give his keys away to some guy. Like someone pretend to be support and go like, hey, you need to verify your account. And people are like, oh, fake support's here. Better give them my seed words. And they give the guy their seed words. And then that quote hacker, who's really just someone that asked you for your seed words and you were stupid enough to give them, which by the way happens all the time to all coins. There's scammers forever on every platform trying to get you. And it's not just crypto. They try and get you in the real world too. Well, anyway, those people will then get emergency end staked for all their stakes.
Right.
And then those emergency end stakes, half the penalties go to the OA, the origin address, which apparently has never sold a coin. And the other half goes to the rest of the stakers that did what they said they're going to do and didn't emergency end stake. So that you could call that a kind of burn as well. Let's just say that whatever our game theory is, to have perfect flawless operation for near 1,000 days now, and to be up 250x versus Bitcoin and 2,500x versus the dollar, it's pretty good. Game theory is working pretty good.
All right. I want to talk about Celsius and then yields now for both Celsius and yourself. So a little bit of background. Celsius Network is or was a major lender, asset manager of cryptos, crypto bank, if you want to call it. You could deposit your cryptos, whatever they might be, Bitcoin, Ethereum, and so on and so forth with Celsius, and they pay you a yield. Now, it turns out they were lending those cryptos to other institutions. Those institutions were paying them a yield for their lending, and then in turn, Celsius would pay you a smaller yield. That's more or less how a financial institution, a bank, works, except that yields are higher and the spreads are higher in this case. The company went bankrupt. Well, they filed for Chapter 11 not too long ago, a few weeks ago, and in June, actually, they froze all withdrawals and deposits and transfers, not deposits, withdrawals and transfers, citing extreme market conditions. A month later, they filed for Chapter 11. Now, you have actually, I retweeted the story not too long ago on my own Twitter, and you actually responded, and you said that you've been begging people to take coins out of Celsius for a long time. Tell us about that.
I invented a product that generates yield while you hold your own keys. No one can screw you over. There is no counterparty risk. There is no middleman. You mint your own coins, you mint your own rewards, and you're the only person in the world that could possibly do it.
Okay.
What does everyone else do? The opposite of why crypto was invented. They want to take your keys from you. That scumbag piece of trash, Mashinsky, who went on your show and tried to get people to part with their keys, who said that Hex was a scam, right? Oh, Hex is a scam. Hex is a scam. Oh, yeah? Hex is a scam? We're doing great, and you're bankrupt, buddy.
Okay, I'm just going to... on your website, I'm just going to... Let's explain how the Hex staking works and how that's different from maybe something else. So on your website, it says Hex stakers get rewarded for locking up their Hex for time periods of their choosing. It's not obligated, of their choosing, between 1 to 5,555 days, about 15 years. The yield consists out of a yearly 3.69% inflation, which you talked about, bonuses like the historic big payday, and penalties. Okay, so somebody looking at this from the outside, Richard, might ask, okay, well, if I lock it up for 15 years, what is the chance that I won't get my money back after 15 years? I mean, 15 years is a long time. How can you guarantee a Hexican who locked up their Hex that they will get their money back after the end of the locking period?
No one can. No one can guarantee that. I don't know that the planet will be here in 15 years. We're going to be struck by a meteor. Like, it's nonsensical question. What I can tell you is you would have got 1,000,000% returns had you bought January 5th of 2020 and held till like 8 months ago without staking at all. You don't have to stake at all. But if you did stake from January 5th, 2020 until say 8 months ago, then you would have made like 1.5 million or 1.4 million% returns instead of 1 million%. So staking is totally, completely optional. And the vast majority of the gains comes from the USD appreciation. So if you don't like long-term horizon thinking, don't stake. But the people that do get outsized returns. And by the way, you can stake with a ladder. You can stake a little bit for short time, a little bit for long time, a little bit for medium time, a little bit not at all. I think it's stupid to just have one giant stake that ends far in the future. If you want flexibility, the issue is if you buy that flexibility, you're getting a little bit less yield because longer pays better.
I'm just curious as to what the percentage of total hex held is staked. Do you know?
Under 10%. I think it's like 9.5.
Oh, okay.
No, that's the reason the yield is so good. If more people stake, the yield would be lower.
Right.
They're inversely proportional. If 100% of people stake, the yield would just be 3.69.
Yeah.
But because about 10% people stake, that 10x amplifies the yield. So another thing is, I want you to imagine that Bitcoin had launched. Everyone called it a scam. Satoshi owned all the coins. You bought it at a penny, and you were able to lock up your Bitcoin for 10 years. How happy would you be right now? How few people in Bitcoin actually got to ride that 690 million% gain? Barely anybody, because they all sold because they were smart when they thought they were smart when they sold on a double. But then it doubled again and 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 again. Hex doubled 13 times. Bitcoin doubled more. And so people think they're smart selling their futures. Nope. In crypto, it goes up a lot higher than you think is possible, and it goes down a lot lower than you think is possible.
Okay. Let's talk about your yields now. You Hex claims to pay an average APY of over 40%. Is that true?
Well, it depends on when you staked. So if you got in when the share rates were lower, then you could be getting 60% right now. Like if you had a 15-year stake and you got in when the share rate was the lowest, you're making like 60% APY.
Right.
If you got in like now and just did like a 1-year stake, I think you might be at 15%. So there's like various calculators people put out there. And so, how long you stake for and at what price you get your shares, it makes a big difference. And the share price only goes up forever. That's how we simulate compounding interest. So if you buy a Bitcoin mining machine, the value of that mining hardware goes to zero because it becomes obsolete, because smaller processes that are more efficient come out and you can't mine at the energy cost anymore. You'll just lose money. The opposite is true in Hex. When you get your shares earlier, they become more valuable over time, not less, because the share price in Hex terms only goes up. So, I think the share price now is roughly 3 times higher than it was at launch.
Okay.
In Hex terms.
Now, your APY is still high by relative standards to other protocols. I'm just going to play you a little.
But that APY is a lie. It's actually millions of percent. We're telling you the APY in Hex terms, but you have to multiply that by the USD gain. The actual APY is insane. The number's so large, I don't even want to tell it to you. So when you go up 1,000,000% and you made another 40% on that, that's 140 million%.
I'm just going to play you up.
It's if you're scared by 38, I bet the million really scares you.
I don't think anyone's scared. I think they're just wondering how that's generated. So let's talk. So I'll
play you Bitcoin with less negative externalities. It's just the same stuff Bitcoin did, but more efficient.
I want to play you a little clip of Alex Mashinsky. It's an interview I did with him 7 months ago in December. I was with him in person. And I asked him about yields, and this is what he had to say about protocols that generate high APYs. Take a listen. I mean, that sounds...
20 sounds too much.
20 sounds too much.
10% sounds reasonable.
It still sounds too good to be true.
Now I'm the reasonable guy now. Now that everybody else is throwing yields around.
Are there any risks to this strategy? Because why isn't anybody else doing this?
So not all yield is created equal.
Right.
Just because we are using safe protocols doesn't mean somebody else is using the same thing. So if somebody's offering you a lot, 20%, I would be very careful digging into why and how they're paying it.
This is what he said. If somebody's offering you a lot, 20%, I would be very careful in look into how they're paying it. So I'm just going to let you respond to that.
This is a piece of trash that tried to get your keys from you and did, that told you that what it was doing was safe. It wasn't. That advertised his product as a good alternative to a bank. I'm the guy that tells you crypto drops 85 and 95% relatively often. I'm the guy that posts the price chart with all the dips measured. Look at this dip, look at that dip, look at this dip, look at that dip. He's the guy that lied to you. He's the guy that's bankrupt. He's the guy that screwed a lot of people out of their futures because they took home equity loans out and they mortgaged their houses to buy his quote safe product and lost all their money. So I'm a self-help author who's got 2 self-help books you could download for free that gave away Hex free to Bitcoin holders, that is now doing the world's largest free airdrop with PulseChain, that has 100% perfect flawless operation for about 1,000 days now.
Right.
The price went up 10,000x. I can't win any harder. I called the top on the day. I can't win any harder. I've run out of things to annihilate. Like, I don't know what I could do to show more dominance in this industry.
Well, right now you can explain how you generate your yields, exactly how the yield
I don't.
staking mechanism.
It has nothing to do with me. It has to do with the demand exceeding the supply. Why do the stake lengths keep going up? Because people believe more and more in the system. Why does the price keep going up? Because the amount of people that want the coins exceeds the amount of coins that are available. It's really that simple. It's supply and demand.
If let's say today, hypothetically, if let's say today nobody else buys any more Hex.
Yes. The same exact thing would happen to Hex.
Could you still pay yields to your current stakers?
You understand that okay. This is a very important concept for you guys.
Yeah, please.
You have to understand this. You take a piece of paper and a pen and you draw yourself a picture of a pony. And whereas before there was no pony picture, magically through the fruits of your own labor, there's now a pony picture that you can put up for sale. Hex, there's no Hex until you, with your private keys, mint your own Hex through the fruits of your own labor. You're the only person in the world that could possibly do it. You're not getting paid by anyone else. There's no middleman. There's no company. There's just you. You are generating your own Hex coins from thin air, just like a Bitcoin miner. So the Bitcoin network rules reward Bitcoin miners for blowing up the environment. The Hex network rules reward Hex stakers for staking their coins for time. So we mine time, they mine electricity. The good news is time is infinite. Electricity is not, the environment's not. So while they're blowing up the environment, you're just delaying gratification. The most successful, proven investment strategy that's ever existed. And how many people would have wished that something would have forced them to not have weak hands on their Bitcoin investments? When something has product market fit, time in the market matters more than market timing. When you buy a scam that just goes to zero and stays there, time in the market doesn't help you. So if you have something that has product market fit, it has a walled garden, it has a niche, it has a community, it has a logo, it has a brand, it has a unique benefit statement, it's on-ramping new users.
Sure.
Time in the market is what's going to kill. And it's when I say kill, I mean do well, right? So imagine if you'd bought Hex 2 years ago, you'd be up 2,500x right now. So it's like this idea of what happens if everyone sells at once. It goes to zero. What does that apply to? Everything: gold, houses, stocks. If everyone sells, it goes to zero. Okay, what if no one buys anymore? It goes to zero. What if there's a solar flare? I don't know, maybe it goes to zero. What if zombies attack? Probably zero. It's just a stupid question. So when you have the world's best performing asset class, and particularly the one more secure than Bitcoin that has a flawless, perfect operation for 1,000 days, I'm going to take that one over all the other trash that's getting hacked and wrecked and bankrupted constantly.
No, I'm not saying if everyone sells Hex,
all crypto can go to zero and stay there at any moment.
No, I understand.
You could also have a heart attack while you're listening.
I'm not saying everything's going to sell. The way it works is I buy Hex, I stake it, I mint my own APY, right? Can you just explain the code behind that?
Well, sure, yeah. Like it's Bitcoin with proof of work change. I can't say it more clearly. The network code says, okay, do you have Hex? Okay, yes. Okay, did you lock it? Yes. Okay, how long did you say you were going to lock it for? Okay, did you lock it for close to that long? Okay, are you early? You're going to get a penalty. Oh, are you late after a 2-week grace? Okay, you're going to get a penalty. All right, you didn't end early, you didn't end late. Cool, then you get to mint free extra coins. You mint your principal from scratch, and you mint your reward from scratch. That's it. And now you just created new coins out of thin air that never existed before. And here's an interesting fact. When you deposit your coins, they don't actually get deposited, they get destroyed. Very important concept.
I'm going to turn to the
concept. I'll tell you why. They have laws around this stuff.
Yeah.
So isn't it much better to not have any custody, to not have any vending machine, and to just destroy the coins and mint new ones out of thin air? Yes, it is. Smart guy, Richard. Smart guy.
I'm going to turn to the community now. There's some smart questions that came in for you as well. This one came in from a user called Dime.
Ooh,
Hi, a
hold
question.
On. Before we do it.
Yeah.
When people ask me when is it going to go to zero and how will I lose all my money? I like to do the other side and go, what happens if it goes another 10,000x? What if it becomes a global reserve currency? I like to do the parade of imaginary horribles to the other side, because there's a lot of upside. There's only 100,000 stakers right now. That's not a lot of stakers, man. A lot of potential. All right, go ahead.
Question for Richard Hart. Can you see Hex ever being listed to Coinbase or Binance? Would he like them listed on there? Thank you.
How can I say this? There are certain companies that email me, and they, at the bottom of their email, say that this communication is protected and under NDA and don't share this communication. And so I'm not sure if it's binding, because I didn't sign any NDA that I can remember. So let's just say I receive emails from large companies that I can't talk about because of NDA. I would like it to see listed on Kraken. I'd like to see it listed on Coinbase. I'd like to see it listed all kinds of places, because the other things that they have listed get their users destroyed, and their users lose all their money.
Yes.
So Hex would prevent that horror. So a lot of these places listed Luna. Luna went super duper duper to zero. How did that help everybody? No, everyone got wrecked. They would have all been way better off in Hex.
Okay.
Same with Celsius. You put money in, you bought Hex, you can sell your Hex anytime you want. No one can stop you. You bought Celsius, you're locked up, buddy. Sorry, stuck, bankrupt.
This is an interesting question. Similar lines of thinking came in from someone named Stay Golden. Why do you think Hex has actually been kept out of mainstream media and hidden on sites like CoinMarketCap when coins like Doge and Sheep are marketed on the front pages?
Look, there's already a lawsuit about that. So Hexkin already brought a class action lawsuit against CoinMarketCap for lying about our market cap forever. You can't have a ranking site that ranks things based on their market cap and then not rank ours and just pretend it's not there. Our price goes up, we're at 201. Our price goes down, we're at 201.
That's actually another question. Why do they do that? Why does CoinMarketCap always list Hex at exactly 201? Because they're not good at their job.
They're literally not good at their job. Occasionally, they don't gatekeep us properly, and we appear on the front page where we belong.
Yeah.
Oops.
Okay.
And then they get around to patching it and screwing us and sticking us lower again. They're just lying. Like, don't pretend to be a ranking site and then not actually rank things and then manually force things on the third page while you constantly list things that go to zero on the homepage. Yams, zero. Luna, zero. All types of crap to zero. And so there's something called the scam industrial complex. Real quick, who can afford to market to you in crypto? People that take money from you. Okay, who takes money from you? Exchanges that want to beat you up with fees. Margin trading houses that want to see you get liquidated and lose everything. YouTubers that promote referral links to margin trading exchanges where you're going to lose everything. And how does the user benefit from something like volume? Volume is how you measure how much the market makers and exchanges are victimizing the users. Users don't make money on volume. Users make money on price. Price go up, user get rich. Price not go up, user not get rich. But market maker get rich. Market maker loves arranging price. And so I see these people that have everything so backwards. They want to see more volume instead of less. How much volume does the Mona Lisa have? Low volume, so is a crap asset? No, great asset. How much volume do houses have? Extremely low volume. Bad asset? No, traditionally good asset. Right? What's Apple's turnover and volume versus its market cap? Quite low. Good asset? Yes, good asset. And so people want volume, but they shouldn't. They want middlemen, but they shouldn't. They don't want to hold their own keys, but they should. And I have to just try and educate so many people on better ways to do things.
Yeah.
And so like when you talk about, and this is another thing, there's only 100,000 stakers. How long do you think that will last? That number keeps going up every day. Every day there's new stakers. Every day there's new addresses. Every day there's new people hearing about it. Everything's
All right,
going great.
I want to get through as many questions as I can. A lot of them came in. This one came in on my Twitter page. So by the way,
the scam industrial complex. Hex deprives those guys of all their money. How is the exchange going to make money on you when you locked up and you can't get beat up trading? How is the YouTube affiliate going to make money on you when we don't have a referral program? How is the CoinMarketCap website that sells ads to guess who? Margin trading exchanges. How are they going to make money on you if you're locked up just making mad gains in Hex? So the scam industrial complex is not a friend of Hex, because Hex cures all those ills and empowers the users instead of the scammers. I'm here to protect you, not some company.
This one came in from a user on Twitter. Ask Richard who owns the Hex Origin account.
Well, you're not supposed to know. It's not publicly known. Worked out good for Bitcoin. Who's Satoshi? Price went up 690 million%.
Is it you, Richard?
Nobody knows. Not publicly known. I tell you that origin address seems to be the world's #1 baller holder to have never sold a coin. You do the chain analysis on that origin address, unlike Vitalik and the Ethereum Foundation that dumps on your head, and all the founders of everything else except Bitcoin that dumps on your head. Apparently the origin address is like the world champion of never selling, apparently.
Well, can you comment on how much of the Hex market cap, currently around $11 billion, is your own?
No, I never talk about my finances. There's no upside to me. People, it's rumored that I'm a billionaire. If you say so, guys, I would never confirm or deny it.
Yeah, I'll come back to that later. This is a question about Bitcoin, actually. We talked about Bitcoin a lot, but I haven't asked you this. So Samuel Van Dam asked, what price level is not profitable to mine BTC? Do you know?
Yeah, it moves constantly. So there's a retargeting algorithm that every 2 weeks, which technically actually is a number of blocks, but it's usually 2 weeks. Sometimes blocks come faster and slower, which is why I add that nuance. So basically, as the price comes down, it becomes less efficient to mine. Some miners have to turn off their machines, the ones that aren't as efficient on electricity. That's the thing I told you earlier about, where the inefficient machines get turned off first because they can't afford to mine profitably with electricity costs. And then once the algorithm notices that the blocks are coming in slower because there's less mining hash rate, it lowers the difficulty so that it's easier to mine again, which makes it, more profitable to be a miner. And then, so basically the Bitcoin hash rate tracks the Bitcoin price. So as the cost of Bitcoin mining tracks the Bitcoin price. And when it becomes unprofitable mine, you just turn your miners off or enjoy losing money, up to you. If you like losing money, you can just turn your miners off and buy somebody else's coins, and then you'll have more coins than mining at a loss.
It's just interesting how I'm looking. So by the way, I pulled Twitter. I got like over 300 questions submitted. I can't read all of them, but there are so many supporters of you and there are so many doubters. It's just a polarization on my Twitter feed. This is not
crazy.
This is not a question. This is a comment, a positive comment. Sure. It says, David, it would be great if you could have Richard on as a regular monthly guest to give commentary on the overall crypto market. He's easily in the top 1% of the smartest people in crypto. So well done there, Richard.
I think I'm higher up, but I mean, it sounds okay.
All right.
I'm way higher up.
Just take the 1%. Just take the 1%. This is a negative comment. So I got to be fair. I got to read you the negative comments as well. Ask him, how does it feel having a successful Ponzi scheme? You've been called a Ponzi before. Please address this one more time. Yeah.
A Ponzi scheme is run by a central counterparty that scams you and defrauds you and lies to you. You give him your money. He says he's going to give you back more, but then one day he doesn't, and you lose your money. In Hex, there is no middleman. There is no counterparty. There's just you. You mint your own rewards, and the market decides the price, and there's no middlemen. Sometimes the price goes up. Sometimes the price goes down. So far, it went up 1,000,000% in 2 years. 2.5? 2 years. Under 2 years. So, it can't be a Ponzi, literally cannot be a Ponzi, because you're the only person in the world that owes yourself anything. You owe yourself your yield. You mint your own yield. No one else gives it to you. You give it to yourself, just like drawing a pony picture, just like being a Bitcoin miner. Except being a Bitcoin miner, you got to fellate electricity companies and fellate mining hardware manufacturers. In Hex, you don't need to do either of those things.
Okay.
I want to make jokes, but they're too spicy. I was going to say you could just have to fillet it yourself, but you have to remove the rib. So the issue is the three claims that people make are Ponzi, pyramid, and bubble. Okay, let's talk about these. Yeah. Ponzi has a middleman. Hex has no middleman. Cannot be a Ponzi, period. Pyramid, multi-level marketing. Do you get paid bringing someone else in the system a commission? No, you do not. A pyramid has the maximum number of middlemen between product and service and user. And so it's extremely inefficient. What are the middlemen in Hex? There's no middlemen. There's you minting your own yield. And then there's the market deciding a price. It's the absolute most efficient minimum middleman possible. Not an MLM, not a pyramid, not a Ponzi. Can it be a bubble? Yes, it can. It just dropped 95%. But guess what, homie? When you go up 10,000x, that 95% just cancels out of 20x. So you're massively up from earlier. And you know what else has done a lot of 85 and 95% dips? Ethereum did a 95% dip. Then it went from 88 to 5,000 after a 95% dip. Bitcoin dropped 85 all the time. I got into Bitcoin at 30. It dropped down to 2. That's a 93.5% drop. Then it went up to 13 and down to 266. Then it went up to 20K and down to 3K. Then it went up to 14 and down to 3,800. Then it went to 69K down to 17,600. Volatility is the price you pay for the world's best performing asset. So Bitcoin dropped 75, Ethereum dropped 85, Hex dropped 95. Which one do you think is going to get up the hardest?
Okay. A lot of people want to know about PulseChain. What is PulseChain? When is it launched?
Sure.
A lot of people are asking that.
Yeah, well, PulseChain is the world's largest free airdrop. We're going to reduce Ethereum's fees by basically doubling their capacity or more. We fork the Ethereum system state so that all of your coins get copied on the new chain for free. You can go play with those coins now if you want. Go to pulsechain.com, go use the testnet. You can go trade those coins for fun right now on the testnet. And we're just waiting for the devs to, improve a few things, higher throughput, more security. And then we can go to mainnet. It's just software's hard, right? If you want truly secure software with perfect flawless operation, it takes a while to get it right, and Hex took a long time to get right. And that's the reason PulseChain, we've been at it for over a year now. Probably longer. We've probably been at it for about a year and a half. And we're close, man. We're so close. If my devs were dumber, we would have already launched. But because my devs are so good, it takes longer because they catch all the things. They're like, hey, this, that. You're like, yeah. So it would be miraculous because it can reduce the gas fees, which are too high. It can give us higher throughput. It can save the environment. Yeah. And it's got better tokenomics. It burns the coins. So 25% of the fees are just burned. And top of VIP 1559 as well, which also does burning. So I'd have to estimate how much extra burning that'll do. And so we've got PulseX, which is our fork of Uniswap, which does fee burning, no inflation, only deflation. We've got PulseChain, which has deflation only and fee burning in protocol. It's really awesome. Like, we're going to soon have vertical integration. We're going to have PulseChain consensus network, PulseX trading, Hex value storage. We've got a wallet being built now as a MetaMask replacement. That's nearly complete vertical integration. The only thing that's missing is fiat on-ramps and off-ramps. That's it. I mean, it's pretty awesome.
Okay, we got time for a few more, and then I'll let you go. I've kept you long enough. Thank you for your time, by the way, Richard. You're very generous with your time.
My pleasure. Thank you.
So we've talked about PulseChain. You tweeted to me, DM'd, you said you bought $10 million worth of watches, $3.5 million worth of cars. I'm just curious. I'm a big watch fan myself. Which watches do you own? Well, you own a lot of them, but what do you talked about the one you're wearing now. Do you have some behind you? You usually have a watch winder wall.
Well, I decided that I shouldn't keep so many watches directly next to me as like a bounty to like violate my physical security.
Okay. Yeah. I mean,
I keep most of them in a secure location, not near me. Like right now I've got this $1 million Rolex Daytona Rainbow with diamond bezel face.
What's your favorite piece in your collection? Do you have one?
I think the GMT Master 2 SARU is still my favorite. I mean, this Casino Jacob & Co. that's 650K is pretty cool. It's real chunky. It's like 47 millimeter or something like that.
Yeah.
Yeah. And the funny thing is, like, I made money on all my watches. So my $10 million in watches is up in value, some of them quite a lot. Most other people's portfolios didn't do as good as my, like, ha 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 flex on other people hobby. Like, I also own the world's largest diamond that
Do
I
you
bought with
sell your
crypto.
watches? Do you buy them to
Never.
flip? No? Okay.
I mean, I called the top on the watches and I was right about it. And so if I were in that market, sure, I would have dumped them.
Yeah.
But the issue is that I invent things that become worth billions and billions of dollars and save people's lives. And so it's better that I optimize for those things which affect hundreds of thousands of lives than it is to just play a small market, you know? Like,
How do you save people's lives? Well, yeah, I know you. Let's talk about your charity, but
sure.
I'll let you answer that question.
Well, I've produced free self-help books for years, long before, anybody knew I was in crypto. I called the top on the day, and I've done that more than one cycle. Did it in 2017, did it now. I gave away free hacks to Bitcoin holders. I'm giving away free PulseChain to everyone that has any coin on Ethereum, including Ethereum itself.
Yeah.
I raised $27.5 million for medical research. PulseChain raised that. Yeah, I mean, I get messaged. I have free videos on how to stop drinking, stop gaming, stop gambling, have better relationships, give better apologies. And so I got a lot of people to stop playing poker, a lot of people to stop trading.
Mm.
I've have thousands of messages of people that tell me that I've greatly improved their lives. I mean, we've had hacks actually cause people that were suicidal to stop being suicidal because it shifts your focus into the future and you have something to look forward to. And you're part of a community. When you've got people that are locking up for 15 years at a time, so many people are locking up for 15 years that it brings the average to 7. This community is never going to be broken up. They're going to be there till the end. And these stakes keep opening. And like it's a powerhouse machine that we built. I mean, and we're immune to so much of the trash that happens to everybody else. All these guys are getting wrecked on these lending programs, not Hexicans. All these guys are getting wrecked when exchanges get hacked, not Hexicans. So I post in a lot of threads. I keep a running thread of all the things that have failed in crypto. And it's so long that your finger gets sore scrolling through it. You're like, wow, that's crazy. Billions of dollars lost to bridge hacks. Oh, isn't that cool that when Pulse launches, your coins are already on the other side? You don't have to bridge. Much more secure, isn't it? Oh, isn't it cool that Hex doesn't require you to give a contract permission? Is you just sign at will? You never have to worry about the contract going evil or anything. What a better design pattern. Oh, isn't it cool that Hex is gas efficient with caching and bitwise shifting? And you just go through and like everything's better and better and better. And it you got to try it to understand how much better it is. Try it.
I want to close up by just talking about your own personal growth over the years. I mean, you yourself have just said, you've done a lot of things differently back then. You're doing things differently now. There are things in the community that, things that you do that the community don't appreciate and that you stopped doing.
Oh yeah, the outrage marketing, yeah.
So I'm just curious as to, what inspired you to, I guess, better yourself personally over the years, if you want to call it that.
Life's not fair. So, I mean, like I've done everything. I've done all the Tony Robbins events. I've walked on burning coals. I've jumped off telephone poles. I've, been on helicopters on top of volcanoes. They're making a documentary about me that should come out before the end of the year. You'll see me racing my 1,000 horsepower Ferrari and driving monster truck with 8 wheels and just doing all types of crazy stuff. I get more news articles about eating $600 per spoon caviar than I do about raising $27 million for charity. I get more news articles about buying the world's largest diamond than I do creating a coin with perfect flawless operation, 1,000,000% price performance in 2 years. Life is not fair. People will only pay attention to me if I'm outrageous. It's not fair. It's disgusting to me. I don't like it, but it's the world that we live in. And guess what? I'm built for that world. I'm loud. I'm outrageous. Here's my $20,000 glow in the dark bag. Here's my $50,000 Louis Vuitton bag. Here's my $350,000 snake bracelet from Bulgari.
Yeah.
If the world wants me to do these things to get attention, previously I talked about my PP size, but the community complained enough, little crybabies. during the bear market, no matter what marketing you do, people are like, "Oh, it's not working." You're like,
Well,
"Dude,
do you
it's bear
feel like
market."
do you feel like you need to do these things anymore? I'm just going to close on this
I
comment.
don't
This is
have to, but I'm in it
this
for
is a
glory, man.
this is a scathing critique of your I guess your extravagance, if you want to call it that. This came in from a user on my Twitter who goes by the name Tennis Pro. He's not using his real name, but it says, prior to Hex, you would frequently slander Musk and Bezos for not putting money into research to save themselves and their families. Yet now you're more wealthy. You use your money in far less productive ways than these individuals, watches, cars, etc. Do you intend to put your money to curing aging? And he says, raising money for charity is not the same as directly donating yourself to charity.
Oh God.
How would you
That
respond
guy's
to that?
so stupid. I volunteered for the Sens Foundation in like 2007 when no one ever heard of it before. I knew about it long before Vitalik donated to it. I knew about it long before Sam Bankman-Fried donated to it. I was invited to be on their board of directors. For a guy that's probably donated $0 himself to say something to the guy that raised 27.5 million is wild to me.
Mm.
I believe that if you don't invest in medical, like, live forever or die trying. Now, as a fat guy, my personal growth has mostly been at the scale. As a fat guy, I need a pill to save me or I'm just dead. So we better get them pills coming along. Here's the good news. If you get the pills to work right, it helps your family. But if you drop some weight, it doesn't really help your kids. It doesn't really help people 10 generations from now. And so eventually we'll cure aging. The question is whether you'll be alive to see it or not. It would suck to be the last guy to die from polio before it was cured. Mm-hmm. It really would. So I find that highly insulting. As the self-help author that gives away free coins, free books, raised 27.5 million for charity, called the top on the day, I prefer to be worshipped, to tell you the truth, as the best person in this industry, rather than get smack talked by nobody.
A lot of people, nobodies and or otherwise, smack talk you. I guess that's part of the game when you're a public figure. You do have a lot of supporters. So to all the supporters and the haters alike out there, what is your final message to the crypto community? What are you trying to, you're talking about curing stuff. What are you trying to cure in crypto?
Not your keys, not your coins. Cryptocurrency was invented to get rid of middlemen and counterparty risk. If you do not have possession of your own keys, if you've given your keys to someone else, if you've given your coins to someone else, please take possession of them, or you will be one of the headlines. So right now, I'm talking to all you guys again. There will be another large hack. There will be another large bankruptcy. Some large portion of you dum-dums that are listening that just can't take my good advice are going to lose your money. Just like the other dum-dums that got wrecked by Celsius and wrecked by other similar entities. I can't say it enough times. Not your keys, not your coins. Mm-hmm. If you want free self-help books, go to t.me/scivive. If you want, follow me on Twitter. I got 250,000 followers there. Twitter.com/RichardHartWin, YouTube.com/RichardHart, Instagram.com/RichardHartOfficial. I'm really here to save you. I've been rich and retired since 2003. So it's about 20 years I've been retired now. And by the way, I live in the same place. Have you noticed that? So 2017, Richard, same place. 2022, Richard, same place. So my cup is already flowing over. Like I spend so much money at Louis Vuitton that they send me a Christmas cake and they send me Easter chocolates and they fly me out to Paris and put me in a hotel for Fashion Week to try and sell me more stuff. Let me know what they're doing for you. Nothing, because they don't like you as much as like me. I've run out of stuff to buy. I'm in this for glory. And glory for me means the best performing assets, the highest uptime, the best community, and as far as aging goes, there's still other things on the checklist. The Save Your Butt Fund that invest in things that might save your life, but also you can get rich on. I want to do that. It just has to happen after PulseChain. So my other kind of longevity initiatives and maybe political initiatives, like I would like to start my own country in about 6 or 7 years. But this all has to come after PulseChain.
You're gonna run your own country?
Well, I'm not sure run it is the right word, but
you're gonna start your own country.
I think that I think a lot of people are very unhappy with the way their governments are treating them.
Okay.
And I think that you can edge out an economic free zone like Shenzhen used to be in China, Hong Kong used to be. You can edge out an economic free zone and get some preferential treatment, tax, and then work your way up to trying to buy yourself out of this horror. A lot of governments are not fair to you, man. And it would be nice if there was an option. And it gets worse all the time. Like if you're an American and you want to travel in Europe, you can only travel 90 days at a time. And then you have to go 90 back out. People don't realize that. They all overstay their visas. And so every new country that gets added to the Schengen area, which I think is 26 countries, was 27 when the UK was in it, I think, it means that your vacation is that much shorter because it's one less place that you can bounce out to.
I see.
So like your ability to travel is lower and lower. Like basically everything in the world is getting worse except the stuff that I'm building. Cryptocurrency is one of the only things in the world can truly return the power back to the people. Everything else is getting worse. Your ability to travel wrecked. And the Canadian government seized funds from people that bought sandwiches for other people for a political protest. They literally shut down the bank accounts of people that bought lunch for other people. That's disgusting. And so we see governments reducing your freedom. I mean, this central bank digital currencies, they want to make programmable so that they can decide what you can buy and what you can't buy. And so they're going to let you buy all the insect protein you want, but not let you buy hamburger meat because they think that that's better for the carbon quotas. And so you're going to get you won't have money anymore with the central bank digital currencies. You'll have coupons, and the coupons will work where they want them to work. This is disgusting. Privacy is a human right. How are you supposed to have privacy when you've got to use Visa and MasterCard to buy anything? How are you going to have privacy when your data is being sold by everybody for everything? I mean, even the United States government buys your location data to get around the Fourth Amendment from unreasonable search and seizure. They just buy it from private companies and they're just like, we didn't do it. The private companies did it. Cool, right? And like everything is getting worse everywhere. You've never had less choice in banking. You've never had less choice in any service. When's the last time you got to call somebody and get a human? Oh, you don't like how your Gmail's working? Try and call someone. Oh, your account got canceled? Try and call someone. You're not their customer, you're their product. So cryptocurrency and the things I'm building are some of the only good things I know going on in the world. Like it's the world kind of sucks right now.
Perfect. All right. Well, Richard, I got to let you go. You've been very generous with
man.
your time again. So thank you for being here. And I like to have you back on again at some point to talk about the
My
crypto
pleasure.
markets whenever
Always a pleasure.
whenever they move. And thank you again. And thank you for watching Kitco News. I'm David Lin.